One of the pivotal changes the Nigeria Tax Administration Act of 2025 introduced is the mandatory e-invoicing that the Nigeria Revenue Service has begun to implement aggressively. We borrowed a leaf from Latin America. As far back as 2003, Chile had adopted mandatory e-invoicing. Shortly thereafter, Brazil followed suit, and Mexico also followed suit sometime in 2011. Egypt adopted e-invoicing sometime in 2020, and in 2023, Kenya upgraded their systems such that no business can claim any business expense as a tax deduction if it is not recorded via the e-invoicing system. And that is where we are going as well. Therefore, business leaders and business owners need to understand that the current e-invoicing drive or sensitization is not a temporary affair. It changes the paradigm and the dynamics of how business is conducted in Nigeria. Going forward, upon completion of the implementation phase, businesses will not be able to deduct expenses that are not appearing on the NRS e-invoicing portal. The current season where you have to implement e-invoicing for the first time is not something you should just leave for your finance team to handle. It's actually something that affects the entire business. It's not affecting just the finance department. It is affecting the entire business as a whole. It is affecting who you accept to be your vendor or your supplier. Imagine a scenario where you are issuing your own invoices and you are compliant and you are transmitting your invoices in real time as required by the Act to the NRS. And so the NRS has a full picture of your revenue. Well, as we all know, taxes are payable on your profits, not on your revenue. But your profit is determined after all costs and expenses have been deducted. Now, if you have suppliers who do not transmit their own invoices, you have a situation where your taxable profits from the perspective of the revenue and what is available to them would consistently be higher than what you have in your books. So these are just some of the examples of the changes that the e-invoicing regime will cause. So it's something that businesses should invest in, and as much as possible take as a fundamental shift from how we used to do business as we know it.
What it means for businesses, how to go about implementation step by step, and while remaining compliant and maintaining efficiency, even as business leaders. So, with no particular order, I'll be introducing our speakers. First, we have Eben Joels. Eben Joels is our managing partner at Transact. He is a strategist with over 25 years of experience. He began his career at Arthur Andersen, moved to KPMG, he worked with PwC before he founded Transact. Eben is a qualified US CPA, a US attorney, and a Nigerian chartered accountant as well. Even adds a very wide global perspective across audit, tax, and legal advisory. Today, even will take us through the global evolution of e-invoicing, how Nigeria has adopted it, and analyze strategic implications and helping leaders to navigate complexities and manage risks while maintaining professional efficiency. So our next speaker, Victor Ate. Victor Ate is an experienced tax expert with nearly 20 years of experience. Victor has advised boards of directors, CFOs on complex tax and regulatory matters. He's also an alumnus of KPMG. Victor is deeply rooted in corporate taxes, especially the petroleum tax, with focus on creating value for our clients. Victor today will narrow down to his core by providing us with deep insights into what NRS invoicing means for tax compliance purpose. It provides us with practical execution roadmap for CFOs and tax leaders to minimize audit exposure. And we have Sunday Awokwegba. Sunday is the CTO of Dovtwex. He is also a leader with over a decade of experience in engineering and high-performance digital platforms. As CTO, he specialized in cybersecurity, integration, specifically e-invoicing and resilient architectures. Today, Sunday will take us through how organizations can implement e-invoicing securely, emphasis on securely, without managing complexities of large-scale technology integration. Now, finally, and the last but not the least, is our guest speaker, Mr. Mohammed Bawa. Mr. Mohammed is the head of product management at the Nigerian Revenue Service. He's a digital transformation leader with over a decade of experience. He has delivered large-scale public sector, such as this e-invoicing, over the years. Of course, he's the lead for this project within FRS as well. So today we'll be hearing directly from the horse's mouth. We'll be taking us through implementations, expectations, and what businesses should prepare for ahead of enforcement. So, a few rules before we proceed, before we dive in fully to the discussions. So the protocol for this webinar, opening presentations by our speakers. Thereafter, we have a moderated Q&A session where we ask them real-life questions, and they'll give practical answers to it with this particular subject matter. And we also launch polls during the session. One will be launched shortly. So we encourage you to answer those questions before they leave your screen. And finally, we'll also have general question and answer. That is, you can ask your questions. We would answer all your questions. So don't feel free to drop your questions in the chat box and would attend to as much as possible as time passes. Thank you once again for joining us. We're really glad to have you here, and we're looking forward to an insightful session. Thank you. So to open the floor is Eben Jones. Eben Jones will be taking us through the global evolution, what invoicing actually means, to take us through the confusion about surrounding invoicing, address the myth, and any other misconceptions about invoicing. So, Eben, the virtual podium is yours. Thank you.
Thank you very much, Hanifat. I would appreciate if people that are here can let me know if my voice is very clear and audible.
Yes,
Okay.
yes, I can
Thank
see
you,
me
Bob.
they can
Thank
hear
you,
you.
Manuel. Okay, thank you, everyone. So, what does this e-invoicing really mean? That is the question we get from a lot of our clients. And sometimes when we explain what it means, it shifts their perspective from seeing it as just another compliance burden to seeing that its entire impact will change how they do business and the kind of business infrastructure, specifically accounting system that they have in place. The system that is being implemented by the NRS uses what is called a clearance model, where the tax authority must authenticate in real time every invoice before it goes to the customer. As I said in the videos that were played earlier, what this does is that the FIRS, or NIRS as it is now called, has real-time view of all your revenue, all your turnover. It also means that as your own suppliers and vendors are invoicing you, the NRS is able to see your business costs and expenses. And so they can validate your profit from their own end without doing the kind of audits that we currently do, where companies are subjected to sometimes 3-4 different audits in a year, starting from desk reviews to audits to tax investigations. So is e-invoicing unique to Nigeria? That is another question we get from businesses that seek clearance from us on e-invoicing. I would say it is not unique to Nigeria. It's actually an emerging system in countries with a historical high precedence of tax evasion. So Latin America started this, Chile, Brazil in 2006, and Mexico, Argentina, they've all recently adopted this clearance model for e-invoicing. And in Europe, the largest country that is adopting this e-invoicing system is Italy. So what exactly is this e-invoicing system meant to address? It is meant to address high rates of tax evasion. The movement to e-invoicing as we have it now did not start today. It started since 2021 when the NRS implemented Tax Pro Max. Tax Pro Max was a major shift in how tax returns were filed before now and how tax payments were made. For many of us, the first shift that was most visible will be in your claim for input VAT at the time after Tax Pro Max was implemented. Before now, we fill the tax form, put your input VAT, and then pay your VAT due based on your own manual calculations. But even on Tax Pro Max right now, by the time you go in to file your tax return, you see that the NRS system has captured your input VAT based on what your suppliers and vendors have invoiced you. Now imagine that under the new system of e-invoicing, what you will get is close to what we call a continuous transaction control model, which is even tighter than the clearance model that we've spoken about before. what this means is that any invoice that is not authenticated by the NRS, what happens is when the invoice goes through the NRS system, it gets a digital stamp, which authenticates it. So if an invoice is sent to you by anyone and is not coming out of the NRS portal, then it's an illegal invoice. So what is the legal basis for all this? The NTAA Act, the Nigerian Tax Administration Act, Section 23, is the legal basis. There are other regulatory authorities that are now issuing guidelines on how this should be implemented, including NITDA. And the NRS has, via public notices, implemented the transition arrangement that the Act asked it to do. So I will invite our Chief Technology Officer, Mr. Tunde Aokwegba, to walk us through the technical nuances of the e-invoicing mandate. Tunde, thank you.
Thank you, Ben. Thank you for joining. The technicality behind the e-invoicing implementation, it's not something to just look at as just sharing PDF or your invoices with NRS. It requires an upgrade from your side. Upgrade in the sense that it requires that you use a tool that can be integrated with NRS. When we say integration, what we are simply saying is to build a bridge between what you are currently using and NRS itself. So in this segment, NRS is now the intermediary who now gives the digital stamp to say this invoice is now a valid invoice. So what is required of you as a person invoicing, as a taxpayer? What's required of you is to make sure that whenever you're sending out invoice, it is going from a digital standpoint that can be integrated with NRS. And once that is done, a digital identity will be generated in order to be able to know in a secure way, to know who the invoice is originating from and who is it for, especially in the case of B2B and B2G. B2C is slightly different because it's not every customer that walk into your shop to buy a cup or buy this or that or their thing, tax identification number or their business registration number. But in the case of the B2B and the B2G, it is required. There are certain requirements that needs to be in place on whichever system you're using. If you're simply using, say, Excel to prepare your invoice and send via email to your client, that needs to change, because there is no way you will be able to build that bridge and NRS to be able to stamp the invoice. And there are two legs to the integration. We have this so NRS already vetted and mandated people to function in these two legs, the system integrators and the access point providers. Fortunately, we play in both space. The system integrator, what do? They are the one that is tasked with extracting the elements of the invoice that you are sending out, and format it in a way that NRS is expecting it. And this access point provider, what they do is they take that, give it a digital stamp, and send it to the NRS server. So the NRS server, upon receiving that invoice, they will go through it and validate every items on that invoice to be sure that they are properly represented in case of is it is it vatable or not based on the kind of service or product that is on the invoice. So this means that you cannot, it's no longer a business as usual of just, opening your system and just generating invoice and sending money. It's no longer the way things will work. So there is now a 72 hours window to either accept or reject invoice transmitted or call back the invoice that you've transmitted. So after which it becomes valid. This whole system or the entire implementation is not just digitalizing invoices. We're implementing a robust government structure that aligns technology strategy with national economic objectives. So, and I'm sure some of our colleagues and the question that we'll have will address a lot of your fears and the business angle to the implementation. Thank you. Over to you, moderator.
Thank you, Tunde, for that insightful explanation. Thank you, Eben, also for setting the context. We now understand that e-invoicing is essentially about connecting your existing business systems, your accounting systems, to the tax authority platforms, right? And that process is called and the purpose is to get the invoice in a structured format the way the NRS wants it. That is the summary of what I can pick from what you said. And in case you missed it as well, that is essentially the summary of how the invoicing works. Okay, thank you so much again, speakers. Now that we understand the evolution and we also have a background into how it works, it is important that we understand the regulatory perspective. What are especially for tax, right? Are there any tax implications? Are there stipulated penalties? What does it mean for business? And how will implementation take place? So to help us address that is Victor Ate. So I call Victor Ate. Victor Ate, the virtual podium is yours. Thank you.
Thank you very much, Anifat. Okay, so I'll be running us through the next slide. Why was e-invoicing adopted in Nigeria, right? Of course, for this kind of framework, government has to have a legal basis, right, for adoption of its robust e-invoicing framework. The legal basis is in the NTA, Nigerian Tax Administration Act, Section 23, right, gives the legal basis, and Section 157 of Nigerian Tax Act itself. Right now, what are the economic rationale for adopting e-invoicing in Nigeria? One, to curb revenue leakage, and you can say tax evasion control. Now we know that historically Nigeria, has had significant VAT and corporate tax leakages, right, driven by underreporting of sales, invoice suppression, informal cash-based transactions. Basically, what does e-invoicing come to do? Just like my colleagues have rightly explained, to make transactions visible in real time, right, to the revenue authority. And that will also enable automated reconciliation of VAT. Of course, we know Nigerian Tax Act has now widened claim of VAT, and so there's going to be a lot of reconciliation of input VAT claims, here and there. So e-invoicing is going to make that seamless, and e-invoicing is also going to eliminate what you call fake backdated invoices, right? So the whole essence is to move the Nigerian tax system from just a trust-based reporting, right, which is what the self-assessment regime essentially is. What was in vogue before the e-invoicing came on board, to a data verified reporting. So reporting is now going to be based on data, not just what the taxpayer submits, right? So the Nigerian Revenue Service will have real-time access. I mean, they will see transactions as they happen in real time. Now, another thing e-invoicing has come to do is to improve the efficiency of tax audits, right? Before now, audits have been traditionally manual, protracted, time consuming, prone to discretion and inefficiencies, right, on the government side, of course. And the reason is not far-fetched, because we operated a self-assessment regime. So what it means is taxpayers, they do all the transactions all year round, then they prepare their reports, right, without an NRS or the revenue authorities knowing whether whatever it is they reported is accurate or not, right? So what that happens, what that does is, during tax audits, the revenue authorities have to now find a way of checking accuracy, and of course that makes the whole audit process time consuming. So e-invoicing is going to now make tax audits data driven, improve interaction between taxpayers and audit, and the government in real time as they happen, right? So the tax authorities can raise queries in real time as they see the transactions, such that at year end it reduces the time spent on audits, right? So they effectively shifts tax administration from a reactive approach to a more proactive monitoring approach. Another thing it does is improves tax transparency and governance, right? So we know that when it comes to audits, right, you could say the Nigerian tax system has not been so transparent, right? So but e-invoicing is going to create a digital audit trail for every transaction, just like CTO explained. Every transaction will have a unique number, so that makes it easy for government to track transactions and reduces opportunities for manipulation by taxpayers. And of course, that's going to strengthen the credibility and integrity of our tax system. So another thing e-invoicing will do is boost investor confidence. You agree with me that if once there's transparency, predictability, strong regulatory system, that will improve regulatory, we improve boost investor confidence generally and improve what you call tax certainty, right? The strategic outcome is that it's going to position Nigeria as a more investment ready and compliant economy. Another thing it will do is broaden the tax base, right? Of course, we know one of the major things e-invoicing seeks to achieve, right, is to formalize the informal sector, include a lot of bring in a lot of transactions currently going on in the informal sector into the formal sector, right? Because as our CTO and as our managing partner earlier explained, invoices, if you are a buyer, for instance, and a seller has given you an invoice, and that invoice is not properly stamped, it has not been routed through the e-invoicing system, you will not be able to claim that expense, because technically that invoice will be legally invalid, right? So what that will do is force the informal sector to route transactions through the e-invoicing portal, thereby we've gone through the legal basis. So another question would be, if a taxpayer decides to say, okay, I want to do things my way, I'm not ready to go through the e-invoicing platform, what's the worst that can happen? There are implications, there are stipulated penalties. Section 103 of the Nigerian Tax Administration Act clearly states that the penalty for not integrating right, shall be 1 million in the first instance and 10,000 for every on every other day, right? There's also a penalty for not passing taxable supplies through the fiscalization system. Fiscalization system means the e-invoicing system. Per transaction, the penalty is 200,000 plus 100% of the tax due, right? The tax that would have been due if that invoice passed through the e-invoicing platform. In addition to what interest at prevailing CBN NPL rate. So this penalty is per transaction. So these are very good reasons why every taxpayer should think of keying into full implementation and integration of the e-invoice. Next slide. Now, government has come up with critical deadlines, right, for different categories of taxpayers. My colleague explained earlier that for large taxpayers, that's those having turnover of 5 billion and above, they are already supposed to have commenced implementation from November last year. What that means is, the integration, most of those taxpayers should already have gone live. However, the next thing now is what? Enforcing compliance, and that would commence from April to June, right? Now, the implication of enforcing compliance is that government will have the legal rights, right, the legal basis or legal grounds to impose the penalties I just explained, right, in the previous slide. And the imposing the penalties will commence from the date, the taxpayers in each category were expected to go live. For instance, for the large taxpayers, if you've not gone live now, we advise you to go to immediately start your integration process before the end of June, right? For the next category of taxpayers, those having turnover of less than 5 billion but higher than 1 billion, we're expected to go live by July 2026. Right? Government will commence the compliance with enforcement from January to March 2027. Now, like I said, even if government is going to commence enforcement from next year, as we'll see here, the enforcement will likely be retrospective, will commence from July 2026 for the phase 2 for this category of taxpayers. Now, the next phase is the small and micro enterprises, those that have turnover of less than 1 billion. They are expected to go live from July 2027. However, compliance enforcement will happen 6 months after, on January to March. Phase 4, after that, all businesses are expected to award keyed into the e-invoicing platform, because that is the end goal, right? To make sure that all transactions are routed through the e-invoicing platform. In future, not just we understand that there are businesses that don't just have physical presence in Nigeria, but also have a digital footprint, right? Those are the businesses that are governed by the significant economic presence rules. They have a digital presence in Nigeria. So all businesses, whether those operating physically or those that have digital footprints in Nigeria, are expected to key into this platform. What to do next? Taxpayers are advised to quickly register, integrate your ERPs. Doesn't matter the ERP, QuickBooks, Sage, Bodo, Sun System, integrate with the NRS platform. And thankfully, we have a technology team headed by Able CTO, who've been doing this for a lot of companies. It doesn't matter your ERP. We are able to help you integrate seamlessly with the NRS platform. Next thing is implement compliant e-invoicing system, right? Of course, if we do help you integrate, you can be sure that your e-invoicing system will be compliant, right? Adopt security validation standards. When the moderator was reading, was doing the intro, she mentioned that Transact and DoftWorks are now ISO 7001-2022 certified. What that means is we have a robust our system has been enabled. I mean, we have a proper security architecture to help your transactions, help you process secure transactions, right? Define and enforce compliance standards and ensure you attend to and you keep monitoring your ongoing audits. Now, of course, there are fears by taxpayers about this e-invoicing. I'll allow our managing partner, Eben, talk through this very quickly.
Thank you very much, Victor. I would like to confirm again that I'm still very loud and audible because I see comments of our audibility from some people. Thank you, Luchola. So there's been a lot of people saying, will this work in Nigeria? If it works in Nigeria, we are Nigerians. I mean, honest conversations now, not, that we're Nigerians. Why do I want to even pay tax? And then now, why do I want the NRS to be seeing my invoices? We have clients that we struggle to teach the principles of transparency of their revenue to their own staff. So you can imagine where a business owner is not even willing to let their staff have a view, except maybe one or two people in finance, on how much they are invoicing. And you are now saying they should let the revenue not just have a view, but be the one authenticating invoices before it goes out. So they have legitimate fears. Some have said, look, this is Nigeria where there are security issues, not just IT security type. We're talking about societal security, where somebody sees that I'm invoicing XYZ amount. Who says he won't sell my data or the information that I invoice XYZ amount to kidnappers? There are real issues. And the other one is, this being Nigeria, won't the NRS or some other officers officials who see the volume of transactions act like, in quote, the Nigerian police by coming to extort me, using that information? Some say, what of even genuine legitimate business issues? We know how Nigerian firms are set up. We've seen systems, especially from some state internal revenue platforms, where it allows you to record only your income, but it doesn't allow you to record your expenses. So what happens where I issue an invoice, the client is not paying, I want to cancel the invoice? What if the NRS platform is not set up to enable me do certain things that are exigent for my business? We've talked about data privacy and technology breach. For those of us that read the news, there's recent news, for example, that a company hacked a major technology company in China, stealing more than 10 petabytes of data just overnight. So who says that, knowing that this is government infrastructure, that is the NRS platform, and they may be poorly maintained, we don't know. Who says that hackers cannot cause a major breach where they get all the sensitive information of all our businesses? So these and more questions are things that we want Mr. Bauer to answer for us from the NRS point of view, So we will also attempt to answer some as much as possible. But before I call on Hanifat, there was an important question that somebody asked, which was, how long does it take? How long, so the process, the first thing is, if you are already integrated with the NRS system, it's an automatic transmission. So there is no gating that will delay your invoice going to client. As you issue it and you just click send, unless something goes wrong, the invoice will go through the portal and go to your client automatically. That is part of what the system integrator does for you during setup. Just to put that in perspective. So Hanifa, please, Mr. Bauer and the rest of us are ready to take the question and answers.
Okay. Thank you so much, Iben. Thank you, Victor. From all that's been explained, we understand that e-invoicing is not just an initiative anymore. It's a regulatory shift with clear legal backing, and it's one that businesses should pay close attention to, especially regarding compliance and the broader tax implications surrounding it. So this now takes us to the moderated discussion segment, where we explore more real life scenarios that affect businesses, how to navigate implementation of this e-invoicing to bring together all we have said, all that's been said by all the speakers, to bring everything together from a business perspective, tax and regulatory. So I have a question for Mr. Bauer, right? So Mr. Bauer.
Yeah, go ahead, Hanifa.
So at what point is a company considered to be in default, especially for businesses that have started integration, but they are not yet live? That's the first question. Then another one is to tell us how NRS is actually ready. Are they fully ready to handle large volumes of data across all businesses? I hope my question is clear, sir.
All right, thank you very much, Nifat. And thank you, everyone. I want to use this opportunity to thank Transact and their partners for putting this together. We like to commend their effort, and every other stakeholder that is trying to help us drive the adoption of this e-invoicing. It simply shows that we all have this same shared vision of ensuring the success of this solution for our country. So thank you very much, Transact. And straight to your question regarding what defaulting with the invoicing meant or something like that. I think you're just trying to find out basically when a taxpayer is in default status. So basically, if you look at our timeline, it is very clear, the timeline when we talk about from the stakeholder engagement to the pilot phase, to the go live, and then post go live review, and then compliance and enforcement. So for example, the first phase for the large taxpayers, currently we're supposed to commence the compliance and enforcement. And based on the timetable, that is supposed to take us through the third quarter, the second quarter, like from the 1st of April to end of June. So what that means is that every large taxpayer in Nigeria is supposed to have finished the integration and begin transmission of their invoices by the end of June. So by the end of June, based on this timeline, any large taxpayer that is not transmitting, it simply means that he has defaulted with the mandate. And of course, I'm happy Victor was able to read out some of the sections of the law that stipulates penalties for non-compliance. So what simply means that the NRS by then have the mandate they are at liberty to apply the sanctions for non-compliance large taxpayers by the end of June. So this is simply what it means for you to default, right? Of course, the timetable is not cast in stone. We have made it clearly even when the publication went out. There's a note that the service will continue to review the progress and, of course, challenges that is coming as a result of the implementation. So what simply means is that if there is need for the service to simply change the timeline, of course they will do that. So also important for you to note that it's not in the interest of the service to apply the sanctions to majority of our taxpayers. What we're encouraging now is to encourage taxpayers to do the integration, to do the transmission. We want to support taxpayers through our partners like Standard and other service providers to see how taxpayers can easily comply with the mandate. So our objective for now is to see how majority of our taxpayers will comply. But of course, at some point, not everyone will comply, and definitely the laws will apply, and that's why the laws are there, right, to regulate everyone. So at some point, definitely enforcement will come, sanctions will apply. So what we encourage taxpayers is to try as much as possible to push themselves to meet up with this deadline. Yeah, of course, if there is any need for extension, like we've done that in the past, last year, of course, management will do it. But for now, we encourage everyone to work with the current timeline, unless if there is further communication, that means that that timeline will be applied. So something goes with the medium and emerging taxpayers. The timing for the enforcement, it's clearly stated. I think for medium, it should be sometime in January next year. And then for emerging, it's, I think, also January in 2028. So this is what it simply means for taxpayers to default with the mandate, right? And then to your second question regarding I think you talked about our ability to manage traffic of invoices, right? So yes, I can tell you that we've done a lot of readiness check, within our infrastructure at NRS by benchmarking against other countries that have implemented, right? So we have provisioned enough storage servers, right, to actually accommodate the traffic that's coming from the e-invoicing that is scalable from time to time, right? So we have made a lot of investment in IT infrastructure that is scalable, and that's why we have a phased approach. So we don't expect every taxpayer to comply at once. So we are monitoring the traffic, and if there's any need to scale it up, we are ready to do it because we have the capacity to do it. And of course, the service now with the new NRS, we're also planning to build a dedicated data center, right? To accommodate all this. So we're ready in terms of receiving traffic. And since we started, we've had quite a number of large taxpayers that are transmitting huge volume of data. We have a lot of the big taxpayers. I may not have to mention the NMC that have complied, and we're receiving the invoice data, and we've not had any issues with downtime, and all those things. So we're ready in terms of receiving that. We will continue to assure you that we will keep improving to mitigate any possible risks associated with that. Thank you very much.
Thank you, sir. Thank you so much. It is clear that the NRS mandate is not only an initiative, that implementation has begun. I actually like the fact that the implementation is done in phases, because a new regime like that is not, I like that it is in phases, so it allows for proper planning and preparation, and that it has actually been introduced for a while. So there's been a lot of times for companies to prepare and get themselves ready for the invoicing. Thank you, sir. So another question for you, sir, is that the fears of Nigerians, and that's what Eben was also talking about, that a typical Nigerian does not want to pay tax, does not want to disclose information. So how do you respond to these concerns, especially what people call the Nigerian factor, right? The fears of excessive scrutiny, undue pressure, extortion. How do you respond to these concerns from the NRS perspective?
So I think probably you may have to clarify for that. But when you talk about Nigerian factor and fear of extortion and all that you have mentioned, that's why we're doing the e-invoicing. The e-invoicing is simply being rolled out to promote transparency from both sides. If you look at not just from the taxpayer, even from the NRS, we want transparency. The reason why we're having some of those challenges that you mentioned regarding scrutiny, over scrutinizing of our taxpayers, all that is because the information is not visible. We have a situation whereby on the part of the taxpayers, because they know that we are not seeing what they are doing, so there's this tendency to always, suppress their information, not wanting to reveal the true picture of their transaction to the NRS. Of course, on the other hand, the NRS, of course, will always want because of the assumption that most of these taxpayers are not giving us the true picture of their transactions. So we go after them by way of audit, investigation, and whenever we go, we over scrutinize them to demand for excessive records, that sometimes, the taxpayer will even have to go and manufacture. So it's because of all that the invoicing is here to seeking to change the current the current situation by ensuring that, okay, whatever you are doing as a taxpayer is visible to us, right? And because it's visible to us, so we on the tax authority side, because we have this information, there will be no need for us to request for anything from us because it's already there. What you have is what we have. So why do I have to, as a tax administration, to start visiting your premises, requesting for documents that probably I already have, right? So it's there to checkmate all these practices to protect everyone. We want to put a system in place that of course, will protect everyone because it's transparent. Everyone is encouraged to do the right thing, right? So there is no tendency for anybody to cut corners. Let me put it in that way. So that is exactly what the e-invoicing is seeking to achieve. And I'm sure even to your business, you will see some of the benefits, not just from the NRS perspective, because even as a business, without transparency, so many things might be going on in your business that you as the business owner or as the chief executive might not be aware, right? Because it's not transparent enough, it's not visible. So even right from your business, you will start seeing the benefit even before coming to NRS, right? Taxation is records. What we're doing is encouraging record keeping that will be available to everyone, right? Whatever you're claiming as expense or whatever you're declaring as, so there is no hiding place for anyone. So the system is only there to protect everyone, to ensure everyone is transparent enough, and then there will be no problem. Nobody will be going after you again for any information as long as you are reporting to us the correct information.
Okay, thank you so much, Plan. I think the key takeaway for me there is that you have it, that is, the business have it, and the tax authority have it. So the purpose of e-invoicing itself is to reduce the so-called Nigerian factor, to reduce excessive scrutiny, to reduce any form of extortion, because invoices transactions are seen clearly from both ends, and which enhances reporting. The keyword is emphasis on reporting, right? So
yeah, the
thank you so
keyword
much.
is visibility, transparency and accountability. I think these are the yes.
Yeah.
So it's just encouraging us to be more transparent, to be more accountable, because everything you are doing now is visible to anyone. So you have no choice than to be, So that's exactly what we're trying to promote.
Okay, thank you, sir. Thank you. So as we're discussing, questions are already coming in the chat box, and some of them aligns with our already created questions. So I would take this question first because I already have it as part of my drafted question. So it means that we are thinking as the people are thinking. So someone asked that, can e-invoicing platform integrate expenses of taxpayers? So I think what the person is trying to say is that, we are saying invoices, that means invoices as relating to sales. So what about the expenses? Does this cover the expenses as well? So I think, Mr. Bawa, can you help us with that?
Yeah, so it's the same thing. So in as much as you are reporting your invoices, somebody else that is reporting invoice in your name is now reporting your own expense. I don't know if you understand. Whatever is an expense to you, right? Meaning that you have paid out for purchase of a service, or so you have paid somebody and it's an invoice to that person who is going to also report it to us. So that's why today the focus, we are not penalizing you, we're only penalizing you for not reporting your own invoice, right? Whoever that is your supplier, right, that's supplying you with an invoice that you are going to pay that person will also report it to us, and it will come with your own details, right, as the buyer. So meaning that we're also having record of your own expenses. So it's both ways, right? So at the end of the day, we have both your expenses and your purchases, right? From both sides of the. That's why it's called the merchant buyer solution, right? So either way, you're either a merchant or a buyer. If you are not a buyer, in this case, you might be the merchant on the other side. So we are receiving that information from the two parties involved. I don't know if it makes sense to you.
Yes, this makes sense. That it is both ways. When it's when a transaction is sales to you, it's also an expense to the other party.
Yes,
so
yes.
So that is clear. I hope the person that asked the questions gets clarity on this. Another question that I would direct to Tunde is that for B2C transactions where reporting happens within 24 hours, how does NRS handle genuine technical failures such as POS downtime or connectivity issues? I mean, I think this person is trying to say that for retail business like the supermarkets, over-the-counter businesses, how is the B2C invoicing model structured for B2C transactions, such that there are typically no invoices issued for B2C transactions? So how is that going to be implemented for such businesses?
Okay, thank you. I think I spoke a little bit about this when I was speaking the other time. For B2B, it is still the same requirement. The only difference is that you're not asking them for their tax identification number or their registration number. In terms of reporting, you are required to upload, make sure that your system, the system through which you're recording your transactions, is integrated with NRS such that it's able to, upload all your transactions to the NRS portal within the speculated number of hours given to you to do that. And we know that, it's simply saying we're going digital. Irrespective of how you run your business, be prepared to be able to go digital. Thank you.
Thank you, Tunde. Mr. Bawa, do you have any addition for us?
So in addition, so I think what you should also know is that because I heard you talking about downtime. So even if you have a downtime, the system supports the ability to generate invoices offline, right? So, and report it whenever for B2C, of course, is you do your business and actually report later, because we don't need to like clear the invoices. You can do your business. That's why we have a near real-time reporting. So the example you gave, like for a supermarket that is selling goods to final consumers, that will definitely not ask them for their TIN and all those things. So they can do their sales and do the reporting at the end of the day, right? And any other time that they choose to report. Yeah, so for B2C also, expectedly, when you generate, you're supposed to transmit to us for clearance of that invoice before you issue. But of course, in the event of a system downtime or anything, you can still generate the invoice offline, append the invoice reference number, QR code, everything, still issue it to the other party, right? So whenever the system is down, you can report it. The only thing is that nobody will be able to validate that invoice, right, number if it's not transmitted to us, right? So I don't see any possibility of causing any disruption to any business in that manner. So that's simply what it means. So you don't have to bother about system downtime or anything. We're currently doing that. A lot of people are doing that. So and that's it. So there is no any problem with that.
Okay. Thank you. I hope the person that asked the question has get clarity on this. Thank you. So the question. Okay.
Let me, there's some other questions that are on the chat that I think are very, very important. There's one question in particular about, that maybe not all companies are able or can integrate their accounting systems due to the size of their operations or frequency of their operations, or the accounting software in use by the taxpayer. So I'll just speak from practical perspective of cases we have seen. So first of all, because this is not unique or peculiar to Nigeria, I've mentioned Italy, for example. That is a G7 country, or G8 country. Massive economy, massive amount of business being done, and they implement the clearance model. Theirs is actually one of the most sophisticated clearance models that you would find. So every company, there are specialized software companies that are out there integrating, not just in Nigeria. In fact, what you will find with some large multinational companies in practice in Nigeria is they will tell you that they are handling the system integration through a global supplier that had been doing that for them, So there is no amount of business that you are doing that cannot be captured by the e-invoicing platform, because there are existing infrastructures for that. And already the NRS is done with the largest businesses in Nigeria, or should be done with them, onboarding them by now, because they started with businesses exceeding 5 billion naira in sales. And according to the NRS, there are just about 5,000 companies at that time, last year, that are doing that, and that they had onboarded a significant chunk of them. Now, what the other issue that companies face that we have seen in Nigeria is where a company doesn't even have proper accounting software. They keep their books in Excel, and they do huge amounts of volumes. What we know is that you can have system providers that are not full accounting software. They're just e-invoicing platforms that are already integrated with the NRS, and you pay them and you invoice through them. So there is really no escape from that. The era of paper or Excel or a simple PDF is gone. So you either use a service provider that provides you that e-invoicing as a service, or you integrate your accounting software that you use right now via the system integrators that the NRS has approved to do that. I don't know if I'd answered the question. Mr. Bauer, you want to add clarity to that, sir?
No, you're correct, sir. You're 100% clear. So there are so many ways to doing this. In addition, also the service providers can also build a middleware service for you that will probably interface with your also ERP to be transmitting. So you don't really have to do direct integration, and you don't have to acquire an ERP if you don't have. There are so many ways this can be done. Technology has made it very, very possible. Like you rightly said, so many service providers have built and already made e-invoicing solution that you can leverage on, right? With minimal disruption to your business to help you invoice your transactions. So you're on point, 100%. And so many people are doing. I think even next week somebody is launching. So because we're interfacing with these service providers every day, we see them coming up with different solutions. Especially as we are going into the medium and emerging taxpayers now. You know, most of them, we assume they probably don't have one system; they are using all the others. So a lot of these service providers are coming up with different solutions to suit these different business models of these different taxpayers. So the whole framework and the ecosystem is just to encourage innovation. And we're happy that so many smaller companies have taken up that challenge to come up with different systems and to play within the ecosystem. And that's exactly what we anticipated. And that's why the NRS did not consider building a commercial system that everyone will come and be generating and uploading invoice. We needed to promote innovation and decentralize the system. Like all these issues of downtime and all these things can be addressed. So we're happy, so far so good. We're making a lot of progress, and we'll continue to take feedback where we need to make amendments, where we need to come up with something new. We're ready to do that, because the whole idea is to simplify the adoption journey for the taxpayer. We don't want anything to limit the willingness of the taxpayer to comply with the mandate. Since it's the mandate and there's a penalty, then it's our job as NRS to actually make sure that the adoption becomes as seamless as possible. Exactly what we're trying to do. Thank you, sir.
Thank you so much, Sas, for the succinct explanations. I'm sure people are getting clarity on their fear areas and areas that required clarifications. So an interesting question from one of our attendees, Kafayat, she asks that although Tunde has answered the question in the chat box directly to her, but for other people, because the question it came up quite a number of times from different people. So it's the one is detailed or a simplified step-by-step process on how to go about integration. So they want to know what's the first thing to do, like assuming they're ready to start implementation. What is the first step what is the first thing to do to implement, to integrate down to full implementation? Then we can now touch on if there's going to be a need for adjustments. For instance, a cancellation discounts. Let's say delivery was not made, or there was a discount on an invoice. How does the NRS system allow for those modifications? So Tunde, can you help us do justice to that question? Thank you.
Okay, thank you. So on the implementation or integrating with NRS, the very first thing that is required of you is onboarding. You have to be onboarded on the e-invoicing platform. Once that is done, they will issue you some security credentials, which is now required for the system integrator that will be used in implementing or integrating whatever system or application you're using to send out your invoice with the NRS preparing your data in the way NRS wanted it. And if there are things that your system does not currently provide, they will help you to make sure that you are able to comply. Because if if the required fields are not present, the system will reject such a transmission. So the second leg will be selecting appropriate access point provider in order to be able to digitally sign and transmit to NRS, which in turn will give you a QR, a valid a status okay, or that your invoice has been transmitted. So that's about. So in terms of adjustment, so how do you make adjustments or how do you cancel already transmitted invoice? There's provision for that. So say for instance you transmitted an invoice and the client disputed it and said no, I don't want that, even though you already had an initial agreement. All you need to do is issue a credit note which will take care of that, and that's how to correct that. And if you are being issued an invoice and you want to dispute it as well, you have 72 hours to go to the platform and say, no, I'm rejecting this invoice. So you can also reject us as a recipient of an invoice.
Okay. So for step-by-step implementation is that you onboard first on the e-invoicing platform, then you go about integration. And for integration, you have to ensure that your current accounting system is able to do the integration. So that means you have to be working with a reputable system integrator. And the next point is to choose an access point provider, because it's the access point provider that you use continuously, right? So that now brings me to a last question for you today. Someone asked that aside the initial cost of integration, I believe this person understands this invoicing a bit. So it said, aside the initial cost of integration, are there other costs, probably costs per invoice, maybe before an invoice is being transmitted? Are there any other costs that will be probably paid to the integrator or the access point providers as the invoicing begins properly?
Okay, thank you. So to answer that question, because I explained earlier that there are two legs or there are two players to the integration. The first is the system integrator, which is the chunk of the activity happen. The other leg is the access point provider. So the access point provider, they are also going, costs, which needs to be recouped. So, and within the space, we've seen a lot of people having different billing models. Some bill their customer based on the number of invoices they transmitted. But we have a flat fee because we believe that the burden of compliance should not be too much on taxpayers. So we are hoping that Mr. Bauer and his team will help bring a proper regulation, regulate that aspect as well, so that taxpayers don't bear too much burden, because some charge exorbitantly for transmitting. Yes, we understand that they are providing their system. They have to pay staff who monitor and support the system. They have all kinds of costs, relating, because they have to go through compliance as well. They have obligation to be paid to meet that and a whole lot more. But I think having a proper structured fee will help the taxpayer a lot more. Thank you. So to answer the question, there is still so there are two legs to the integration. So, and there are cost implications to both legs. Thank you.
Okay. Yeah. Thank you, Tunde. So the key takeaway is that there are two legs to integration. system integration and the APP, and that we expect that the revenue service, issue guidelines on what costs will be applicable to those. But we expect that, a considerable or little to no fee is actually, imposed to ease, burden of compliance. So thank you for that. We have some task questions here. So I would ask Victor to answer these questions from our participants. In someone asked, it said, we taxpayers operate under cash basis. I mean, I think this person is talking about VAT, right? That since VAT, for instance, is on cash basis, and now that invoices are issued on accrual basis, that this is you're issuing invoice not necessarily because cash has been paid. So what does that mean for e-invoicing with respect to how things will be done going forward? Victor.
Okay, thank you. Right. So, I mean, the e-invoicing framework doesn't change the laws as we have it, right? VAT, compliance, remittance is based on cash, right? It's on cash basis, right? Invoicing is on accrual basis. That will not change. But however, your filing on tax promax will still remain on cash basis. So that is the answer to that question.
That's a very short and effective answer. So
also, in addition to that question, remember the invoice too will have the payment status update. So you remember every invoice will have to be updated, whether as a paid invoice or so. If it's not a paid invoice, even if the service is considering the data for your filing, it will not be considered, right? So the invoice has to be paid first before it will count for any, data analysis or this. And like Victor said, filing is still going to be done on our tax administration system. You still the era of self-assessment. So we are not using the invoicing data to help you file your returns. We're only saying it's only an information gathering system for now. Thank you.
Okay, thank you, sirs. That's such a comfort that invoicing is not changing, the tax act, the tax laws, and that the tax formats that we use currently for filing still exists. It is not replacing it, and that tax will continually be filed on tax formats as appropriate. Thank you, sirs. Another question for Victor is that with e-invoicing handle business situations like the issue of bad debts where companies have, rendered services and issued invoices, but collection has now become a problem. They're not able to recover their receivables, and even issues like I think Tunde has explained the issue of credit notes, but I want to take us through actual business realities, like a case of bad debts. How would it happen in real life with its invoicing mandate? Thank you.
Okay, so I'm happy Tunde has explained the case for credit note for reversals, right? Of course, these are business realities. It would invoice the customer, and for one reason or the other, there needs to be a credit note, probably a cancellation of that invoice, issuance of another invoice, right? The e-invoicing platform, as Tunde has explained, caters for that already. However, for bad debt situations, we all know that there is also another reality. Bad debts will typically not happen in the same year. Of course, if it happens within the same year, it doesn't qualify as bad debt. So what that means is you would have perhaps filed your returns for the first year already. Of course, returns are based on accrual. Turnover is recognized on accrual basis. You would have probably filed your returns for the first year. Then when the debt goes bad, what the laws, right? You still fall back to the income tax laws that says that you have to provide enough documentation, enough proof, right, to support the fact that that data has actually gone bad. And proofs include things like recovery efforts, how exactly, do you want to prove to the revenue that that data has gone bad. Once you have all of those documentation, then that goes outside the e-invoicing framework. It's now a matter of dealing with the laws, the tax laws, and dealing with the revenue authority. So once you have that, that is enough support, because typically you report bad debt as an expense, right? Bad debt expense will not be required to go through e-invoicing framework. I don't know if Mr. Bauer wants to explain this, but I don't think the e-invoicing framework contemplates that where debt goes bad, they will now allow you issue a credit note to cancel. So maybe Mr. Bauer can my understanding is that it has nothing to do with the invoicing. It's about you gathering your documentation and showing into the revenue authorities that this thing I recognize though in so year. For some reason I've not been able to collect, and all efforts are proved unsuccessful.
Exactly, Victor. That's the position. Don't need to listen. So that is the position. You have said it quite well. Thank you.
So let me thank you, Victor. Somebody raised a question that I will bring up, but you said it all. Tax laws are there for you to continue filing on self-assessment basis. But what this e-invoicing system has done is that it increases tax transparency. So hopefully, as we get more and more into the implementation phase, as more companies become compliant, the number of audits that we currently get from the revenue authority as businesses will reduce, hopefully, because what the new e-invoicing regime will do is that the issues that are contentious will be fewer. So in a situation like where you have this bad, the only contentious issue between your when they review your returns with their own records will just be a few instances such as this bad debt that you have spoken about, or perhaps some expenses that maybe you incur them with a party that is not within Nigeria's jurisdiction. For example, foreign transaction that is not cash, so they don't have records of that. So the areas of contention in tax audits will be significantly narrowed, and I'm sure that those will be resolved strictly based on what the law says. That said, somebody asked a question that I think a lot of project-based companies would find is very relevant to a lot of project-based companies. A situation where you are issuing a pro forma invoice, which is not an invoice, or you are collecting a deposit because you've not done the work, and your accounting system is set up such that you only recognize income, on milestone basis when you get to certain milestones, the person was asking how the e-invoicing system would treat that. So I don't know if Mr. Bauer would help us, or Victor, so that I don't have to answer it.
So the simple answer is we are not changing anything. So how do you currently treat it? So if you are collecting it by milestone, you can choose to report it like that. Remind you can always update the invoice by referencing the initial invoice you have issued, right? So if you are paying a second milestone, you can reference that initial invoice that you probably have issued to update the payment or anything like that. So it's quite flexible. We're not changing it. It's as flexible as, so just treat it the way you are treating it now. The system will support it. I think that's a very simple answer, because different companies have different scenarios, like in the construction, industry. We have received those kind of questions. So the simple answer is treat it the way you are treating your invoice currently, and the system will support it. If it's not supporting it or you're having issues doing that, then you escalate to us and we'll see what we can do about it.
Thank you, Mr. Barr. So, I mean, just to add to that, if you have a proper system integrator, one of the first things they need to do is understand your business, understand your transactions, and then when they implement, they have to test, and then, you consider all scenarios that are peculiar to your business.
Exactly. That is what we encourage. They need to study your system, understand the complexity of the nature of business, see how whether the current system accommodates it. If there are situations where you think we have not made provision for that, you escalate it through the service provider, and we have a discussion. We have had series of meetings with different taxpayers from different sectors to make us understand how their businesses are run, and then together, if it's not accommodated currently, together we'll find a solution. Currently, we are talking with the people in the gambling sector. What do you call them? Gambling and these people that do what's the other name for them? All this Nigeria bet.
Okay. Gaming and lottery.
Gaming, yes, gaming. So we're talking to them. We've had similar discussions with the insurance guys. We've had similar discussion with the logistics and shipping. They also have some people. So we are ready to discuss. Anybody that thinks he has a peculiar scenario that he thinks the system does not accommodate, we're happy. We're also learning. From the onset, we have not promised anybody that we have built a perfect system. All we have promised people that, we'll make the system as flexible as possible in order to minimize disruption to your business, right? The only issue is when we have a clash with what the provisions of the law says and what you are doing as a business. And we think that probably you should correct one or two things, because what we also realize is because there is no mechanism to enforce certain provisions of the way people do of the law that provides for how certain things should be done as a business. A lot of people were doing what they like, right? So, but now that we have probably a system that will ensure compliance with the provisions of the law, then people now begin to struggle. No, this is the way I've been doing it. But if it's not in alignment with the law, then you have to align it with and that does not mean that we're now causing disruption to your business. So we need to understand the difference, please. So a typical example, the law has always specified that for all your suppliers must have a tax identification number. Now, if there was no mechanism to ensure that it's done, that now made it possible for a lot of people to do business with anybody that is not even registered, because that's what we discovered. And those are some of the initial successes and challenges we encountered, some of the few large taxpayers that went live, that we discovered that some of their suppliers are not even registered with the NRS, and they have been doing business with them. And that's contrary to the provisions of the law. So if the invoicing is now mandating you to request for their tax ID, and you are now saying you don't have the tax ID, and because of that, you are now saying we are slowing down your business because we've asked you, go and get their tax ID. And you are now telling us that, no, because of that mandate, we are slowing down your business. How logical is that? You understand? It's not. So I'm just giving you an example. As a business, you also need to do the right thing. Align yourself with what the law says before you can even begin to tell us that, what we have provided is slowing down your business or causing disruption. So it's just a context that I have this, and it's a takeaway for you, the tax consultants, right? Which because I'm happy that you're both providing advisory service to your clients and at the same time also providing solutions. So it puts you in a very good position to actually educate them on their obligations and actually how this two can work. So once you are looking at it from the two sides, it makes it easier for you to actually convince your clients to do certain things, unlike some service providers that don't have any experience regarding tax advisory, they are only technology centered. So we've also noticed that most of them sometimes struggle with having to convince the taxpayers to implement the system in a certain way because they don't have the knowledge of the tax. So this is just the scenario I painted. I believe I've been able to pass on the message very well.
Yes, sir. You have. That's exceedingly well. Thank you so much for your insight and the good explanations. Thank you to all our speakers. Thank you, everyone. I don't know if you can still take more questions now, but I think the last question, I'm not sure if that has already been answered, is that for companies that use simple tools like Excel to do their reporting and accounting, do they need to get an accounting system or software before they can do this invoicing?
So Hanifa, we've already answered that question, and I spoke to it, and Mr. Bauer also spoke to it. We explained that if you do not want to implement a full accounting software because of this, there are commercial e-invoicing compliant billing systems that are already available. And Mr. Bauer also said part of the good news coming from this is that there are many indigenous service providers that are now coming out with products that are so that you get an e-invoice ready plugin that just allows you to send your invoicing for a fee. And you also explained that it is for that reason that the NRS did not consider building a commercial e-invoicing platform. So I think that question has been addressed very thoroughly.
Okay, thank you, Eben. So at this point, let's have a final word from Eben and Victor as we're moving to the end of this, as we're moving towards the end of the session, let's have a final words for for businesses, for business owners, for finance leaders, what to do and to bring the meeting to an end. Victor, can you go first, please?
Okay. My one last word, right, for taxpayers is that looking at the strategic importance of the e-invoicing and the penalties that have been stipulated, right? The tax planning, taxpayers should be thinking of doing right now is keying in quickly, right, to the e-invoicing platform, right? Because that's if you don't do that, then the penalties may erode value from your business. So I advise taxpayers to quickly key into the e-invoicing platform to avoid penalties. Then also make sure you seek the advice of a consultant to guide you through how to best comply, right, with the new tax laws and approach the whole e-invoicing framework going forward, right? So your consultant should be your best friend going forward. Thank you.
Thank you, Victor. Eben, your final words, please.
Yes, so I want to thank everybody that spent time with us today. We feel very honored. There were close to 100 people that attended this event. We've always said that time is the most precious resources that a human being has. And for you to spend close to 2 hours with us today, it shows that you are really interested in this subject and in this topic. And for very good reason too. One of the things we tell clients all the time is that tax is paid on profit. That looks like a simple statement. But many people, the reasons why they evade taxes is because they don't understand that it is not your revenue that is subject to tax. It is not your total sales. As a business person, you are entitled to deduct your legitimate expenses. It is on your profits that the government has a right to the tax rate on it. Now, if you don't put in place a system that allows you to determine your cost properly, then you are doing yourself a disfavor. So what this e-invoicing system is done is that, please note that your own revenue will be reported. You need to deal with businesses that are also reporting their own revenue. So it tells you that you should be more, you should put in place risk management processes for your vendor selection. It's not everybody that should be your vendor because of the risk that you may not get a tax deduction for their expenses in the event of an audit. So these are many more some of the things that you should think about. Then more importantly, if you are looking for a partner, Mr. Bauer has said it all. There are few firms, with all due respect, in Nigeria that combine accounting, tax, and technology in one roof. We do. We also have a custom-built e-invoicing solution called IP, which is out there competing with several others in that e-invoicing plugin, where in case you don't want to have an accounting system, you just want to be sending your invoice in a compliant manner. There are many tools out there, but we also have one called IP. So I want to thank everybody for attending, and let's continue this conversation. Our contacts are out there. We'll always respond to emails, and the purpose of us being in business is to see that other businesses that we work for succeed. Thank you very much.
Thank you, Eben. Thank you for the both of things.
And just sorry about that. I want to thank Mr. Bauer as well. This is the second time he has taken time to join us in discussing this e-invoicing. And Mr. Bauer is not an ordinary voice within the NRS because he was part of the design and is part of the team saddled with this e-invoicing. So I want to thank you, Mr. Bauer, on behalf of our clients and friends who attended this event. We thank you for your wealth of knowledge and time. Thank you.
Yes, thank you, Mr. Bauer, once again. We really appreciate your support as always. Thank you. Thank you to our panelists. Thank you, Ben. Thank you, Victor. Thank you, Tunde. And most importantly, our audience, thank you so much for joining. In case we did not answer your questions, I'd like to inform you that it was not intentional. You can always reach out to us via our contact details. We are very active on LinkedIn and on Instagram. Most importantly, this webinar will be uploaded to our YouTube channel as Chartered Accountant on YouTube. So you can go back to watch it, in case you missed any parts. And once again, we thank you for joining us. Please remember that e-invoicing is here to stay and that it is better to key in early to avoid being caught off the rack. So thank you once again, and till our next session on any other topic that's is important like this. So hope to see you again. Thank you and enjoy the rest of your day.
Thank you.